Hi, my name is Nurashifa binti Syahimi and my metric number is 2025292176.
Hi, my name is Aiden Afrina and my metric number is 2025204994.
Hi, my name is Putri Nur Akila. My metric number is 2025850542.
Assalamualaikum and hi everyone. I am Nurul Alimah Sarah binti Radwan and my metric number is 2025879588.
Compound interest is interest that is added to the initial principal of an investment or loan, thereby increasing the balance and, in turn, increasing the amount of interest earned or paid in the next period.
So, for my part, I would like to explain about the formula in this chapter, which is compound interest. First is S equals to P, 1 plus I powered by N, and I equals to S minus P. P stands for original principal, S is future value or maturity value, I is interest amount, K is annual nominal rate, M is frequency of conversion, I is interest rate per interest period, which is I equals to K divided by M, and N number of interest period, which is N equals to M multiplied with T.
Problem statement. 2 years ago, Puan Mariana was laid off and received a compensation of 125,000. She plans to invest the entire amount in a Hong Leong Bank fixed deposit account for 10 years. The bank offers an interest rate of 1.75 compounded quarterly.
Objective for our problem statement is, first, to determine the accumulated amount at the end of Puan Mariana savings period. Second, to calculate the amount of interest received. Third, to calculate the accumulated amount if there is an additional charge amount 2,500 ringgit into the same account after 3 years of the initial investment. And the last one is calculate the accumulated amount if there is charge the interest rate to 2.10% compounded quarterly after 10 months from the end of investment period.
Objective 1. To determine the accumulated amount at the end of Puan Mariana saving period. P 125,000, M 4, K 0.0175, I equals to K over M 0.0175 over 4 equals to 7 over 1,600. N equals to M multiplied with T equals to 4 multiplied with 10 equals to 40. To calculate accumulated amount, we use S equals to P 1 plus I power of N. S equals to 125,000, 1 plus 7 over 1,600 power of 40. S equals to 148,848.95 cents.
So for objective 2, which is calculate the amount of interest received. For this question, we use formula I equals to S minus P, which is I equals to RM 148,848.95 cents minus 125,000. So the answer is I equals to 23,848 ringgit 95 cents.
Objective 3. To calculate the accumulated amount if there is an additional amount 2,500 into the same account after 3 years of the initial investment. For P1, 125,000. P2, 2,500. I equals to K over M, 0.0175 over 4 equals to 7 over 1,600. N1 equals to M multiplied with T1. 4 multiplied with 3 equals to 12. N2 equals to M multiplied with T2. 4 multiplied with 7 equals to 28. To calculate S1, we use formula P1, 1 plus I, power of N1. S1 equals to 125,000, 1 plus 7 over 1,600, power of 12. The answer of S1 is 131,722.74 cents. For P new, we use formula S1 plus P2. P new equals to 131,722.74 cents plus 2,500. P new will be 134,722.74 222.74 cents. Now to calculate S, we use formula P new 1 plus I power of n2. S equals to 134,222.74 cents. 1 plus 7 over 1,600 power of 28. S will be 151,674.
Our last question, which is objective 4, which is calculate the accumulated amount if there is a charge. The interest rate to 2.10% compounded quarterly after 10 months from the end of investment period. So for P1, which is P equals to 125,000, K1 equals to 1.75%, which is 0.0175, M1 equals to 4, T1 equals to 10 divided by 12, which is 5 divided by 6. To find out I, we need to use our formula, which is I equals to K divided by M. So I equals to 0.0175 divided by 4. So the answer will be I equals to 0.004375. And last one is N. N equals to M multiplied with T, which is N equals to 4 multiplied with 5 divided by 6, and the answer will be 10 divided by 3. There is changes amount after 10 months of investment period, which is K2 equals to 2.10%, which is 0.021, M2 equals to 4, T2 equals to 9 over 2 over 12, which is 55 over 6. For I, we use I equals to K over M, which is I2 equals to 0.021 over 4, and the answer will be I equals to 0.00525. For N, we use N2 equals to M multiplied with T, which is N2 equals to 4 multiplied with 55 over 6, and the answer of N, which is 110 over 3. To solve the problem statement, we use formula S1 equals to P bracket 1 plus I1 to the power of N, which is S1 equals to 125,000 bracket 1 plus 0.04375 to the power of 10 over 3. So the answer of S will get 43,525 ringgit and 89 cents. For the last step, which is S2 equals to S1, 1 plus I2 the power of N2. S2 equals to 43,525.89 cents, 1 plus 0.0525 to the power of 110 over 3. So the final answer will get S2 equals to 25,809.25 cents.
First and foremost, I would like to explain about the introduction of annuities. An annuity is a contract issued by an insurance company and bought by individuals, where the student pays fixed or variable income stream to the purchaser. It is a series of equal payments made at regular intervals. There are 5 examples of annuity include regular deposit to a savings account, monthly shop rentals, monthly insurance payments, annual dividends received, and monthly pension payments. An ordinary annuity means payments are made at the end of each payment period, and the interest and payment period are the same interval. We assume that money invested each period is invested at the end of that period. The annuity concept helps people plan for the future in terms of investment and savings. For instance, financial consultant advise people on investments, and property agent estimate housing repayment. For my part, I would like to present about methodology, which is future value S refers to savings and present value A refers to loan. So formula to calculate the future value S that refers to saving is S equal to R bracket 1 plus I power of N minus 1 bracket divide by I. For calculate the interest is I equals to S minus R bracket N bracket. So S equals to future value of annuity. R is periodic or regular payment. I equals to K over M, and N equals to MT, which is M multiplied with T, and I is for interest amount. So formula to calculate the present value A that refers to loan is A equals to R bracket 1 minus bracket 1 plus I bracket power of negative N bracket that divide by I. And to calculate the interest of present value is I equals to R bracket N bracket minus A. So A equals to present value of annuity. R is periodic or regular payment. I equals to K over M, and n equals to mt, which is m multiplied with t, and I is interest amount.
So, this is the problem statement for topic 4, which is annuity. Imelda bought a sport car from PMH Recon for RM 200,000. She decided to pay an 8% down payment using the revenues from her business, and the balance was borrowed from the iBank Islam Personal Financing. The bank offers charge interest at rate of 2.30% compounded monthly. This loan will be repaid in monthly installment for 9
Now, I will present the objective of this case study. First and foremost, to determine the amount of monthly payments that Imelda needs to make. Second, to calculate the total interest incurred by Imelda. Third, to calculate the total outstanding balance if the payment was settled earlier than scheduled by Imelda after making the 40 payment. Fourth, to determine the outstanding areas if Imelda has missed the 5 consecutive monthly payments.
The result and discussion: cost price equals to RM 200,000, down payment equals to cost price multiplied by 8% equals to 16,000, and for the balance, cost price minus by down payment, which means RM 200,000 minus RM 16,000 equals to RM 184,000.
So for objective 1, to determine the amount of monthly payments that Imelda needs to make. Between the information in the question, A equals to 8% multiplied with 200,000 equals to 16,000 equals to 200,000 minus 16,000 and equals to 184,000. K equals to 2.30%, which is 0.023. M equals to 12. I equals to K over M equals to 0.023 divided by 12, which is 23 divided by 12,000. N equals to 9 multiplied with 12, and the answer is 108. So the formula is A equals to R bracket 1 minus bracket 1 plus I bracket power of negative N bracket divided by I. A is 1,8400 equals to R bracket 1 minus bracket 1 plus 23 divided by 12,000 bracket power of negative 108 bracket divided by bracket 23 over 12,000 bracket. 184,000 equals to 97.4709163 R, and 184,000 divided by 97.4709163 equals to R. So the final answer is R equals to RM 1,887.74
The
cents.
second objective is to calculate the total interest incurred by Imelda. Based on the problem statement, we know amount for A is RM 200,000 and amount for R equals to RM 1,887 and 74 cents, and lastly, the number of interest period is 108. To calculate the interest incurred by Imelda, we use the formula I equals to R multiplied with N minus A. I equals to RM 1,887 and 74 cents multiplied with 108 minus with RM 200,000. And then we calculate and we got I equals to 3,875 and 92 cents.
Next, for objective 3, to calculate the total outstanding balance if the payment was settled earlier than scheduled by Imelda after making the 40 payment. Between the information in the question, N equals to 68, R equals to RM 1,887.70 cents, K equals to 2.30%, which is 0.023, M equals to 12, I equals to K over M equals to 0.023 divided by 12, which is 23 divided by 12,000. So the formula is AN equals to R bracket 1 minus bracket 1 plus I bracket power of negative N bracket divided by I. First thing first, we should to calculate the N unpaid amount. The formula to calculate the N unpaid amount is N unpaid equals to N total minus N paid equals to 108 minus 40, and the N paid amount is 68. So to calculate the answer is A68 equals to 1,887.74 bracket 1 minus bracket 1 plus 23 over 12,000 bracket power of negative 68 bracket divided by bracket 23 over 12,000 bracket. Moreover, A68 equals to 230.4698571 divided by bracket 23 over 12,000 bracket. The final answer is A68 equals to RM 120,245 ringgit and 14 cent.
The fourth objective is to determine the outstanding arrears if Emelda has missed the 5 consecutive monthly payments. For this case, we use the formula Sn equals to R, open bracket, 1 plus I, bracket, power of n minus 1 divided by I, and close the bracket. For the n unpaid equals to 5 plus 1. We need to plus 1 in every number of missed periodic payment. We can solve this case by adding all the information in the formula, which is S6 equals to 1,887 and 74 cent, 1 plus 23 over 12,000 power of 6 minus 1 over 23 divided by 12,000. We add all the amount in calculator and we got the final answer is RM 11,380 and 85 cent. So I will explain the conclusion of compound interest. Compound interest is a financial concept that illustrates how money grows over time. Compound interest has two special cases such as additional principal added and change in the interest rate. Both of these methods taught us how to calculate the total amount of saving or loan that we make through a banking company. Apart from that, compound interest increase the desire to save because the interest earned accumulate more quick than simple interest method. This makes compound interest more highly valuable in saving, investment, and long-term financial planning. Last but not least is the conclusion for annuity. Annuity can be applied in many financial decisions such as housing loans, car loan, and retirement savings. It helps us calculate the monthly payments and plan our finance better. Businesses also use annuity to manage investment and future cash flows. Overall, annuity concept helps solve real-life money problem and support smarter financial planning. Lastly, this is our reference for compound interest and annuity. Thank you.